Assalamu Alaikum everyone, welcome back to the channel. In today's video we are looking at different sectors. As you can see here, I've got different pies in my own portfolio, and some of them are consumer discretionary, consumer staples, financials, healthcare, industrials, information technology, materials. So every single sector here is part of the S&P 500. So what I've done is, so far we've done videos for consumer staples, financials, healthcare, industrials, information technology. I don't remember doing one for materials, so if we haven't done that, we will do one for the materials, and then we will look at again maybe real estate. But today we are going to focus on consumer discretionary, so I'm going to talk about that in a second. The consumer discretionary includes companies like that basically sell products that we don't really need every day. Okay, that including Amazon, Teslas, and McDonald's, Starbucks, Nike or Nike, whatever you want to call them, HDs or Home Depot, Lowe's, and so on. So there's a lot of companies, so anything to do with retail and so on are included in the consumer discretionary. So if we look at the Vanguard consumer discretionary ETF, okay, a lot of the companies in here are obviously not Sharia compliant. That's why we're looking at it. Pick the companies that are Sharia compliant and obviously invest if we think they are actually good companies. So you've got companies like Amazon, Tesla, and so on. So these are basically, this is the sector that we're going to look at today. So the first company we're going to look at in this is not actually part of the S&P 500 yet. It's a small cap company, and that is a company called Plurus. Plurus, I've done a video last video. So if you want to dig deep and find out a bit more information, have a look at that, and obviously have a look at their financials. This company basically manufactures and sells off-road vehicles. They sell all-terrain vehicles, side-by-side vehicles, snowmobiles, motorbikes, motorcycles, and so on. They are very small company, so only $7 billion company at the moment. So I'm assuming, this company, not assuming that I know they've been around for a very long time, but they are very small companies. So sometimes the small caps can be actually a good investment because not many people are aware of this kind of company, and they probably do not invest in them. Let me very quickly show you. Yeah, so if you look at this, you can see for a year they are up about 11%, then 25% a year to date. About last 6 months they down. This month they are down about 9%, and so on. So in the last 5 years, so if you invested in this company basically 5 years ago, right now you would be up about 41%. So that is a lot of basically growth if you think about it. And small company that pays a very small dividend, and that's basically something that I'm definitely doing a lot more research about this company. I'm really considering adding to my own portfolio, and I will let you know inshallah if I do. So they currently are trading $118 per share, very low PE of just 11, 7.2 1 billion% of market cap, annual dividend of just about 2%, which is good. 5-year growth rate of 2.8. again, that's okay. That's all right for a small company. That's absolutely fine. And they have been growing their dividend over the last 24 years. Payout ratio of only 26%, which is excellent. And according to Simply Safe Dividend, their dividend is actually safe, which is about 80%. So we're looking for basically anything above really 60 is kind of safe anyway. So free cash flow only 80 million. So it's not in the billion yet. And the 52-week range has been from $86 to 147. So from 147 to 118, you can see it basically has dropped quite significantly. At the moment, I think it is quite, in terms of beta, it's quite volatile stock. Maybe it's because it's small cap company. Maybe that's probably what it is, but they are quite volatile, hence why it's actually quite down at the moment. And profit margin is quite low, but return on equity is actually quite high. Return on these two, we normally look about for 15% or more. And when it comes to overvalue, undervalue, it is actually undervalued according to Simply Wall Street, and according to 4 stars from Morningstar. So Morningstar is actually saying it's $173 per share. That's basically the fair value for this. And at the moment, a lot of the analysts kind of agree it's a buy. When we look at the financials, so when we look at their balance sheet, for example, we talked about it in the last video, but you can see the balance sheet is heading the right direction. The income statement is also doing the same thing, and the cash flow is also basically increasing at the same time. Now, the other thing we can look at the next 5 years, the prediction. So based on the growth estimate, this company's growth basically expected to grow about 15%, and just this year expected almost 9%, which is very good thing to see. Now, low in terms of the price targets, so 112 is the lowest, 153 is the medium or average, and then 175 is on the high end. Same thing again when we look at the for example to pranks as well, you could see that is 173 is the highest, 150 is the average, which is what you see there, and then the lowest is 113, and it's currently trading 118. So it has upside, as you can see here. And there's about 4 analysts that have looked at this stock, and you can see the Morgan Stanley, for example, is saying it's $165 per share, so that's what they're expecting. They're saying it's a buy, and you can see it's got about 38% upside, 34% upside, 31 and 34% upside. So it looks really undervalued at the moment based on all of these analysis that we've looked at so far, on the analysts that have looked at it so far. But obviously you always need to have your margin of safety, and just make sure that if it's 150 they're looking at, obviously if you buy it now, that's your margin of safety. That is basically better. I'm not saying you should buy now, but I'm just saying that if you bought it now, you'll probably get it for a decent price. Right, the second company we're looking at is Home Depot. Home Depot is a home improvement retailer and is probably one of the biggest in America. We don't have them in the UK, but they are definitely one of the biggest in America. They are currently trading $329 per share. Their PE is slightly higher, so that's trailing PE. Forward PE slightly seems to be lower, but trailing PE is slightly higher. Market cap of $341 billion. Dividend about just over 2%. And then 19 almost a 20% 5-year growth rate, which is absolutely amazing. And dividend growth years of 12 years. They have done this for 12 years. They've been paying their dividend, increasing their dividend in every single year for last 12 years. And payout ratio just 45, which is fine. And then dividend safety of 87%. They've got about over $16 billion in free cash flow, so that they can spend on paying dividend, buying in new stuff, or increasing the how many shops they own, or how many retail basically places they own, and so on. And then when you look at the price range, so the 52-week range, you can see is 246 to 345. So right now it's 332, so it slightly basically went down a little bit. Beta, it's not too volatile, so it's one of those companies that are like very stable, so they're not going to swing 2-3% every single day, or 5% or more. Profit margin is quite low for what we're looking for, but return on equity is very high, and as you can see is about 12% overvalued at the moment. According to Simply Wall Street, the price should be about $286 per share. And according to Morningstar, it's very expensive and it should be about 220. So they are very moderate when it comes. Morningstar very moderate, but these guys have said 286 and currently trading over 300. It's apparently is a buy according to Yahoo Finance, but I will say it's a hold for me at the moment. I haven't been adding to it at all. So let's have a look at their financials. You can see there's basically this balance sheet is going up. The income statement is actually heading the right direction when it comes to total revenue. Okay, and then when you look at total cash flow from operations is also going the right direction, and that's what you want to see. Now, next year they about 5% growth, and the next 5 years about 10 or about almost 11% growth. And currently, if you look at the Tip Rank, for example, Tip Rank, you can see it's a $363 per share. And when you look at the average, when you look at the highest price target is $375 per share, and then the lowest is 350. So the currently is 330. So the lowest is they saying is 350. So again, I believe they are also very similar to Simply Wall Street, but I actually then what you can do is basically get average out of 3 of them and then use a margin of safety to make sure that you're not overpaying. But like I said at the beginning, this stock is a hold for me right now. Right, so the next stock we're going to look at is Nike. This company, I haven't actually invested in this company yet. I've been a little bit cautious about the situation that's going on in China, but recently they came out with a statement, and if you go to their website, they actually talked about it in depth, and their stock actually went down after that. So in China, everyone was selling their products, basically no one was buying their product and so on. But anyway, if you are interested and you don't mind investing in the company, this is actually a great company. I am currently considering, but I'm just going to wait a little bit more to see how things go. And obviously, if the financials add up, then I might actually buy something. But again, I am very cautious about what's happening in China. So I'm going to wait a little bit more until I have actual confirmation to see if the company is head in the right direction when it comes to that sort of a thing. I'm sure you know the company and what they do. They're currently trading $163 per share. PE is very high, as you can see. $260 billion company, so one of the biggest, if not the biggest, when it comes to anything to do with trainers and sneakers and whatever you want to call them. Annual dividend yield of just 1.67% is really low, but this is not the company the type of company that you will buy because of the dividend. You'll buy because of the growth, because of the capital gains. So 5-year growth rate of almost 12%, which is excellent. 19 years consistently paying their dividend, and then you've got payout ratio of 25%. 99% dividend safety, obviously, because they don't pay that much. Okay, and they've got about $6 billion that they can actually do whatever they want to do with. The 52-week range is about 110 to 174. 174 right now, trading 163, so it kind of went up basically recently. And as you can see, the beta is not actually that bad, so they're not very volatile stock. Profit margin, not bad, but return on equity, a lot of these companies, what you will notice in terms of the consumer discretionary, return on equity is actually quite high. So this one is 55%, and they're really overvalued according to Simply Wall Street. According to Morningstar, is 128, and according to Yahoo Finance is a buy, but I will say this is a hold for me. So if you look at their financials, so if we go to the financials and look at the graphs, for example, so the balance sheet is definitely heading in the right direction. Same goes for the total revenue, and same goes for the operating total cash from operations. Last year went down because of COVID situation when the lockdown happened, and then they have actually kind of reinvented themselves by actually spending a lot more time and money in there, basically setting up their website to the point where they actually made a lot of sales on their website, kind of thing. Currently, if we look at the next year, so the expected growth will be about 17%, and then 17% in the next basically 5 years. And as you can see, it is a buy according to Yahoo Finance. Like I said early, Yahoo Finance basically are saying $183 per share. That's the fair value. That's what they were saying. But again, like I said, you need to think about that. So 186 is according to this website. The lowest is 168 and currently trading 163. So it's still got a chance. If you wanted to add to this and you are comfortable buying, then like I said, I'm looking into it, but I'm just going to wait a little bit more time. Obviously, it is overvalued, so I'm not buying it now. And by then, hopefully, they will clear up the situation, what's going on in China, and hopefully do the right things for everyone involved. So that's the third company. The next one we're going to look at is Lowe's. So this is one of the stocks that I own in my portfolio, and as you can see, they're currently trading $206 per share. PE is not that high, it's really good, so I'm hoping that will come down. The forward PE will be a lot lower anyway. 139, almost $140 billion market cap. Dividend not bad, 1.624. 5-year growth rate of almost 17%, and 58 years of paying that dividend, basically increasing that dividend. That is really great. I think they are in the dividend kings or dividend aristocrats, one of them. Payout ratio, dividend aristocrats are 25 years or more, dividend kings are 50 years. So the companies that raised their dividend 25 years or more are called dividend aristocrats, and kings will be 50 plus years. So definitely a king then. Payout ratio 29%, dividend safety of 93%, so very safe. They've got free cash flow at the moment of $9 billion that they can pay for dividend, invest in the company. 145 dollars per share to $215 per share. And then when you look at the beta, is actually a little bit volatile, and it's true actually. When the stock goes down, it actually goes down a lot more, but when it goes up, it also goes up a lot more. So which is kind of nice, but sometimes it's a bit scary. Profit margin not that great, like I said, for all of these companies, but when it comes to return on equity is very, very high, 631%. Okay, undervalued at the moment by 8%, so they're expecting to be the price to be $211. At the moment it's $206 per share. According to Morningstar, on the other hand, they are saying it's 175 the fair value. Okay, so they are saying it's slightly overvalued at the moment, and it's a buy at the moment according to Yahoo Finance. Right, so the next thing we're going to look at is their balance sheet. So as you can see, the balance sheet is actually going the right direction. Now, a lot of these massive jumps, so cash and short-term investment, so in terms of the balance sheet, you can see this has happened because a lot of people are stuck at home, and then obviously they are doing up their homes, because that became the place where they work and basically sleep and so on. So they are spending a lot more money because of that. So I wouldn't be surprised if the revenue goes down a little bit in the next couple of quarters, but we will see how that goes. So total revenue obviously is heading the right direction, and the total cash flow from operations is actually jumped massively, but I wouldn't be surprised if it comes down next year, just for that reason I've just said. Now, when it comes to the next year, so it's about 8%. Next 5 years, in terms of the growth-wise, and the estimated growth, it will be about almost 18%, which is amazing to see. And in fact, while we're there, let's have a quick look of Yahoo Finance. So you can see is about, almost 2, which is basically a buy. 229 is what they're saying should be the average, and the highest should be $281 per share. Now, when you look at this 229, so that is the average. The highest will be 247 and 210, and it's currently trading lower than that. Now, I really like Lowe's. Is one of the stocks that I actually hold in my portfolio. I do have, in terms of the consumer discretionary, I have Lowe's, and I've got Tesla there, and I have basically Home Depot. And as you can see, Home Depot, Lowe's is up 21%, and Home Depot is about 10%. So I do have quite a bit, and I'm actually I want to buy more Lowe's, so hopefully if I see a drop, I would be buying more of that. Now, the reason I want to share this is, like I've said to you, I just want to make sure that I bring to you just not small cap companies, but obviously the S&P 500, the biggest companies, the 500 biggest companies in the world, and look at them and see what some of the Sharia compliant companies out there that are actually decent enough to invest in. And some of these companies I don't really not talk about that much, companies that I don't invest in, but if I see a company that I think I might be looking into, then obviously I will let you know, and I will I will share my thoughts and what I think about these companies. Right, if you can enjoy that kind of this kind of videos, please like, subscribe, let me know if you have any questions. I appreciate all your comments. I like to type right back to you guys, because in the end of the day, I wanted this to be a community of brothers and sisters that can help each other, inshallah, in the long run. Because in the end of the day, the reason I created this is to share my journey, but at the same time I want to learn from you guys, and I want to help anyone out there that's still thinking about maybe the stock market is not for you and this and that. So I just want to help others, and obviously in the long run, by doing this research, trust me, I'm learning a lot. I've been doing this now for a while, and I've read so many books, but putting into practice is actually helping me a lot. So, and every penny that I put into here, like I literally think about, when I'm buying a company, I literally go through every single thing. I go on YouTube and I watch their own channels, because a lot of them have their own channels, and how they communicate with their customers. I go to forums, I read everything to do with their banks, basically balance sheet and so on. So I literally immerse myself into that company and find out everything I need to know before I invest, and then I can share that with you when I know a little bit more about the companies. So I appreciate every comment that you make, and I appreciate the fact that some of you appreciate what I'm doing. So I thank you very much. Enjoy your day. Assalamu Alaikum.